A Wall Street whiz with a golden reputation, Bernie Madoff earned trust from many of his clients because he made the money. Lots of it, or so they thought.
I mean, would you think this was a fraud?
In the 1970s, Joyce Greenberg was a single mom. Her investment with Madoff helped to put her 2 children through college and graduate school.
I am very appreciative of the success, and I'm absolutely shocked and appalled by what has occurred this week.
Now she's worried about the $1 million nest egg she invested with Madoff in 1987.
I have no idea if I have any assets left at Madoff.
She joins a list of thousands of investors who may have lost up to $50 billion, according to Madoff himself. The former NASDAQ chief allegedly confessed to his own sons that his investment business was a fraud.
Oh, my goodness, yes. They're not only worse off than when they started, many of them are destitute at this point.
Attorney Brad Friedman represents 60 of Madoff's former clients, many of them Florida retirees. But the client list includes billionaires, hedge funds, and international banks, even the owners of the New York Mets baseball franchise.
One of the lessons, though, is that even the most sophisticated investors can also be very vulnerable.
The FBI alleges Madoff confessed to running a giant Ponzi scheme, a reference to the infamous Italian swindler Carlo Ponzi. Early investors were paid unreal returns out of money from other investors. Over 17 years, Madoff delivered an annual rate of return of 10.5%, a number some like hedge fund advisor Jim Voss always thought too good to be true.
No financial trading strategy or investing strategy that we or anyone else knows of can produce decades of stable, positive, low volatility returns.
And as federal investigators look to see if others knew of the scheme,
The check is for exactly $1 million.
Joyce Greenberg is still recovering from the shock of the news that her $1 million investment, quite literally, may not be worth the paper it was written on. Michelle Miller, CBS News, New York.